I'll bet my portion of the account, and sometimes I trade foreign currency, sometimes I trade commodities, stocks, the whole 9 yards. You'll be able to see how much the portion of the fund is up. Just to show you, I probably won't bring this up too often. Just bring this up real quick. You guys should see it in just a second. I'll pop up the screen. It's an interactive broker's account. Need a second. I got to turn off my firewall. How many people have been trading over 5 years? Several of you. Actually, I'm going to be bringing up too, probably having a little bit of trouble with it, is a place where you can practice some of the principles that I'll show you. It's called Think or Swim. One of the guys here showed me. It's a really cool broker, and I'll bring it up and show you guys here in a minute. But we'll start laying out some principles first. We'll probably get into that about the third week. Let me just bring this up. Here's how I start. Hold on. Come on, I got the caps lock on. Okay. 1 year, 1 year, 1 year, 1 year. So most people have been trading under a couple of years. That'd be my guess. So anybody that's been trading over 5 years, I was just curious. Okay, I'm going to share something on my, you can't see right now. Okay, Kelly, tell me if you can see this. Hold on. Oops, save it off the screen. I'll show you this, then we'll get started. It's just to give you some validity of what I'm doing, all right? Here's a hedge fund. Okay? These are the open positions in the fund. This is how much it's up so far this month. Can everybody see the screen? Can you see the screen, Kelly? No? Oh, good. You can see it. How about you, Kelly? Okay. It's up about 95,000. This is a portion that I trade on. And there's probably about 80 or 90 open positions using different strategies, lots of option strategies all the way through here. Some of the more simple ones, I'm long 500 shares of NYX, I'm long 600 shares of ISE, and I'm going to sit down and show you exactly how we got that account up there. I traded with another guy named Micah Brooks, and we haven't really had a losing month to speak of. We had 2 losing months last year, but they were due to some, we had to change the way that we do business in the state of Utah. They won't allow you to have a performance-based fee. We have to have a asset under management fee. So they made us stop trading. So what I'm going to do is I'm going to close this off, reshare a document, and we'll start with a little set of notes, okay? Turn on the pointer. I'll turn on the pointer, okay? Here's the pointer over here. Okay. Now, any questions about how this all works, you can ask Kelly. I'm not here to solicit any business from anyone. I'm here to just show you exactly how I'm trading. So the first thing we're going to do is we're going to make a trading plan. The trading plan to trade for a living. Now, there's a big difference between trading for a living and trading for a wealth. Who wants to learn to trade for a living? Okay, and who wants to learn to trade for wealth? Because there truly is a difference in the strategies you take. Yeah. Okay. So the first thing we do is we're going to have a part, it's trade identification. We're going to have a trigger section. We're going to have a target section, targets. And then we're going to have a trade management section. Okay. And you guys will get a copy of these notes. They'll set them on the Metastock forum. Kelly will give you directions on how to get them. Trade management. And then we're going to have a section in here called instruments. Because we're not going to worry about the cost of the stock right now. We'll use some of these different instruments to maybe approach the problem. And then I'll have a note section and some articles. Okay? And by the time we're done, this thing will be quite a lengthy little document. All right? Articles. The first thing we're going to do is we're going to work on some axioms. We're going to have 4 axioms that we're going to start. Axiom number 1. Okay? And to do this, I'm going to show you a little trick. I need to make sure that I'm going to unshare the desktop. I'm going to reshare it here so you can see my Metastock. Okay? So everybody tell me when they can see the Metastock so I know when I can move on. It looks like it's come up. I'm going to switch stocks. And one of the things that I'm going to do in Metastock is you can go backwards in time and 2000. I'm going to go back to a trade I took on that illustrated a really good point. Just please refrain from your answering this. I just want to see if somebody else gets it. Okay? And let me turn back on my pointer. Now I want to know right where my cursor is, right there, is that support? Okay? Does anybody have an answer for it? Do they think that's support right where the cursor is? Yeah, it is. How about right here? Is that support at the same exact across the blue line on the other side of the chart? Okay, no, it's not. That's right. It is not support. Okay? It is not support. So, what would make this support? Let me find the cursor. Okay? What would make it support? Does anybody know what would make this bar support? How about stand? Blue bar? No, a blue bar wouldn't make it support. Not a retracement. A close? Yeah, Dick, a close of what? A close where? A close above. That's exactly right. Above the high of the day. So we're going to deal with this axiom. Axiom number 1 is, and I'm going to put this on I'm going to be flipping screens here. Okay, we're going back into our notes section. Axiom number 1. Support is a upward movement in price. Upward movement in price. Okay. Defined by a buy stop. Okay. So support is really, it has to increase in price. So one of the things that traders do is they'll trigger in. Let's just call this a technique 1. Technique 1. This is your first technique for a trigger. It's a basic technique. buy above the high of the day, buy above the high of the day, because support is becoming support. Okay, does that make sense to everyone? Okay. Support is an upward movement in price defined by a buy stop. Who doesn't know what a buy stop is? If you don't know, ask right now, because it's going to be the basis of a lot of things we do. So just ask. Maybe this will make the mic a little bit better if they can hear it. Good. Everybody knows what a buy stop is? No questions? No. Okay. No. All right. I wasn't sure. Okay. So just bear with me for a second. Under our notes, we're going to have order types. Okay. This is going to be really important. A buy stop means to buy at a higher price. You are refusing to buy until the instrument gets, I hit a typo here. Instrument gets more expensive. Okay, does that make sense to everyone? So a buy stop means that you absolutely refuse to buy it until it gets more expensive. A buy limit means you are refusing to buy until the instrument gets cheaper. Okay? Does that make sense? Any questions on that? Because this is one of the most basic building blocks of trading. A buy stop means that you're going to buy at a higher price. A buy limit means you think pretty damn highly of yourself. You're going to be buying as it drops in value, and you're predicting the low instead of participating in the change in trend. So, 1, you participate in the change in trend. 2, you predict the low. Okay? No. Okay? In your broker, you have a buy limit. And in your broker, you have a buy stop. Okay? It's a type of order. It's an order supported by all brokers. Well, if you have like a broker that you call and you talk to on the phone, 99% of them that I've ever met do not understand what you're doing as far as this goes. But it's an axiom. It's a truism that support is an upward movement in price. Does everybody agree that support is an upward movement in price? It must move higher. Are both these accomplished with stop limit orders at IB? I like IB. A stop limit order would mean this, okay? Basically, you are buying in a range. Let's put in the third order type. Stop limit equals buying in a range, okay? The stop triggers the order. The stop triggers the order at a higher price. The limit refuses to buy at a too high of price. Does that make sense? Okay, that's a buy stop limit. We just took 2 of those and combined them together. Any questions on that? That's pretty basic. Any questions? This is just a technique. Okay. Before I show you some other techniques on how to buy stocks, because we'll jump into that at first, I'm going to jump backwards and I'm going to talk about cost of trading. Cost of trading. Before I get into cost of trading, I need to ask, does anyone in this room not know what an ATR is? Okay? Does not know what an ATR is. I know. Okay, an ATR is an indicator. I'll put an article in here for you, Brian. You'll have an article. This article will basically explain to you what an ATR is. It's the high minus the low averaged out over 14 days, or how far the stock moves. So before I talk about this cost of trading, we're going to give the stock a gas tank. So ATR 14, okay, is the high minus the low averaged out over 14 days. Okay, it's how far the stock moves per day. Or another way to state that, it's the gas tank of the stock. So it's just the volatility of that stock. Okay? Well, I won't call it a trading range, cash investor. You have to say, I'm going to get into a very important point tonight about trading ranges, and we can't call it a trading range because we can say the trading range of one day. If you say that, then it's fine. So we're going to take an analysis. We're going to do a cost of trading analysis. And this cost of trading analysis, we're going to say, we're going to have a benchmark. And the benchmark is the stock has a ATR of 1. Okay, Brian, what does that mean? And we are trading 100 shares. What does that mean? You don't know? Okay. If the stock has an ATR of 1, it only moves $1 per day on average. So if I bought 100 shares of stock and it only moved $1 per day on average and I didn't have any cost, how much would I profit at the end of that day? How much would you profit? Anybody? How much would be your potential profit? 100. Exactly. So this is our benchmark for cost of trading. Now we're going to say cost of trading stock. Cost of trading stock. Okay? Cost of trading stock. Okay? And we're going to add to this later on, but right now we're just going to cover stock. Somebody tell me the cost of trading the stock. What is it? Tell me 3 costs. I want 3 costs of trading it. Anybody? Commission in, commission out. Okay. The spread. And how about a new one called the trading range cost? Okay, the trading range cost is how much you have to get up to know support is support. That's a new cost probably for some of you. How much do I have to give up to know support is support? Okay? That's how much I have to give up to know support is support, because we define support as an upward movement in price. So that becomes a cost in how much I have to wait. Does everybody agree with that? Slippage, commissions. We'll skip slippage because that has a lot to do with the broker and the volume of the chart, but slippage is one. Okay. Everybody agree that we have to wait for an upward movement in price to define support? No questions on that? Okay. No questions on that. Let's pop to the next topic then. Okay. All right. In this particular example, if I was to buy above the high of the day, and you should see a chart now. If anybody can't see a chart, you're going to have to tell me. Okay? And you may have to jump backwards to grab it. We are going to say this. We have to give up 16% of our potential profit on this chart. Would everybody agree with that? That if I was going to buy above the high of the day, my trading range cost would equate to 16%. All right? No questions? Okay. Let's talk about another possible entry technique. We're seeking a way to lower our cost. Let's just talk about a basic indicator like the stochastic. Okay? Now, the stochastics basically works like this. Who likes math? Let's see, anybody here like math? Nobody likes math? All right. Well, the way the stochastic works is this. The stochastic, and I'll give you an article about this, it is the the closing price minus the lowest low of the stock over X number of days divided by the highest high of the stock minus the lowest low of the stock over the same number of days. Who could tell me what that's really telling me? Who knows in here? I know a couple people know. So what does that tell me? What's the stochastic indicator up here telling me? Okay, and I'm going to ask Brian, let's ask AC. Okay, AC, what on a stochastics, where would I buy that? Where would I buy it? In a classic stochastics. Nobody knows? Okay, let's call Bonnie. Bonnie, where would you buy that on a classic stochastic upswing? Yeah, it crosses the 20. Exactly right. That formula, what do you think that formula tells you? Does that formula tell you to buy that stock? That's what a stochastic's doing. See there, when it crosses the 20. Exactly, Bonnie, you're exactly right. Okay, what does this formula tell you? It tells you where you are. You see this number right here where my cursor is? Okay, I'm waiting for it to pop up on the other screen. What this section is, it says stochastic oscillator, and the value of it is 7.1. Five. Okay? That 7.15, that means that we're within 7% of the 14-day low, because that's what I have my stochastic set at. Our buy signal will occur when it crosses the 20% line, or in other words, as it rises off the 14-day low. Okay, turn on the pointer. Okay, let's find that. Thanks. Turn on the pointer. Okay, right there. Right there. It should have brought up an indicator box, but I guess it didn't. Right there, you have to just believe me the value of the stochastic. Well, you can see it right here. See the value of the stochastic up here where the pointer is? Let me kind of express this to you in a slightly different way. I'm going to go back into my notes. Okay. We're going to go back in here and we're going to say technique 2 that we're going to use in buying. We're talking about an indicator. The second technique is to buy using an indicator. All right? Technique 2 is going to be buying. We're going to put an example. Example, stochastics. Stochastic. We buy as it crosses the 20 line. The 20 line. Okay? That means that we have to have a, that means that, come on, computer. That, okay, with the stochastics is 20% of the range you set. You always are giving up 20%. So if I go down here to my cost of trading stocks and we talk about technique 1 right in here. Okay, still silent. Oh, it's not me. All right. Technique 1. If we talk about technique 1, this is the cost of it. On technique 1, we have commission in, commission out. The trading range is how much we have to give up in order to support us to support. Example of this is 2/4/2004 LLTC. The cost is 16%. Okay. Technique 2. Okay, I'm giving you some examples of this. Technique 2 is this. Okay. Oops. Technique 2 works like this. The cost of trading with the stochastics is 20% of the X, or just the range. Okay, the range. Whatever range you pick. You're going to have to give up 20%. It has to go up 20% higher. So we're always giving up 20% of our potential profit. Who wants to give up 16% or 20% of our potential profit? Who wants to do that? Not me. I have no desire to give somebody 20% of my potential profit. Although those are valid with our axiom, we're always buying at a higher price. Okay? We're going to use a different technique entirely. Okay? One that I like. Now this does not, I'm going to show you something. I'm going to bring up a chart. Who knows a good bull pullback right off the top of their head? Just a chart right off the top of their head. One that they're looking at maybe. Nobody? Well, I'll show you two that I'm in. They're a little bit more complex. I'm in NYX. And let's just look at our cost of trading this, okay? This is NYX, all right? I was in pretty close to the lows, averaged in close to the lows. Averaged in not using stock, a different method. I don't want to put that one on there yet. Now, I'm going to bring this up, and we're going to look at a real-life example that had today, okay? I'm going to take right here, and this is my potential profit. The reason I like NYX, I trade all the time in the New York Stock Exchange, not that I like them, but the range is really wide. The range between support and resistance is 70 clear to 90. If I was to take and possibly buy this above yesterday's high, let's go 5%. No, let's even go 10 there. Hold on just a second. I'm guessing where it is. No, let's even probably 12. Okay. The cost of buying above the high of the day yesterday would have been 12%. 12% of a huge range, $75 to 90. That is very unappealing. I mean, I would have to let the stock, it closed at 72.70, go above 74.22 using the first technique I articulated to you, and I would only have profit above that dotted line. That is not very appealing. Okay, not very appealing at all. All right? So if I was to use the stochastic oscillator, and we took, and it's set to 14, and it said to buy, it has not even triggered a buy yet. It's going to be, if I take a 14-day range, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, there's the highest high at 14 days. We're going to pull this down. Right there's the 14-day one. Okay? I'm going to take out some of this other stuff, and we're going to put in 20%. The stochastics hasn't even told us to buy yet. Okay? We would have to buy, well, we got to go back a little bit further. Let's see, I put it on 14. It would have to buy as it rises in value, and it hasn't even hit it yet. See what I got it set to. It's very, very close from the close. Hold on just a second. Turn on your pointer. I keep forgetting. Sorry. Okay, no pointer. Okay, the stochastics we would have to set up to forfeit 20% of our range. And that's coming up pretty close. So I don't want to forfeit 20% of my range. It's not going to work for me. I think I modified this stochastic indicator to match the trading range. I'll teach that to you guys in just a second. Anyways, you'd have to buy it as it goes up, and it has not even triggered a buy yet. So we would have left a $4 run on the table. So how do we avoid that? This is what we're going to do. I'm going to go to window, new window, and I'm going to bring up two charts. Who has Metastock end of day and who has Metastock real time? Okay, let's see. God, I can't even display this, Kelly, with this low resolution. I'm going to have to really cut a lot of stuff off the chart. Real time, real time, real time, end of day, pro, nice. Okay, this is the advantage of using Metastock Pro. And you don't have to be a day trader to justify this at all. One trade will cover the cost of it, and I know that sounds cliche. The top one is a 5-minute or a daily chart. Okay? The 5-minute one is on the bottom. Now this right here, do you see where this little R is? Where I just drew that line, and I'm going to point right at it. Right where that little R is. That gives me the opportunity to trade the stock as it goes up, which brings me to one of my other axioms. And I'm going to talk to you a little bit about how to manage this. One of the ways I got started trading, and some of you have heard this story and it'll bore you, was with a company called BMI. And BMI, they used to put in satellite dishes for traders. And I had a client, his name was, he wasn't a client, his name was, I can't think of it right now, it's escaping me. But anyways, he worked in Vancouver, British Columbia, and he was an install tech for us, and he installed this satellite dish, and the person who had the satellite dish installed, King Pol Pot, refused to pay my install check. He owed me $4,000. And the guy said, well, I'll teach you how to trade stocks, but I will not pay you. And they argued and argued and argued, and Wayne told me, his name was Wayne. Wayne told me he was really tired, and he just agreed, and he said, I'll come back tomorrow, you teach me how to trade stocks, and I'll eat the install cost. And the guy said, no, I'll tell you right now. He goes, support is like the wind and buy above resistance. And I was so scared to call Wayne because he was just livid the next day when I talked to him. That little 2 pieces of advice cost him $4,000. And I called him back about 6 months later to do an install, and this Asian lady answered the phone and goes, Wayne's line, here's Wayne. I said, Wayne, what's that? He goes, well, he made $1.2 million trading the yen. He caught the yen at like 86 cents all the way up to like 126. But what he did is this. He simply, there's an axiom that we have. The axiom is that the failure of resistance is the formation of a trend. Okay? So what King Pol Pot was saying is if I cross above resistance on a 5-minute chart, that may be like a 5-mile-an-hour wind. But if I cross above resistance on a 15-minute chart, that may be like a 10-mile-an-hour wind or a 20-mile-an-hour wind. So you start to trade as those resistance points fail, and you will be able to trade into a lengthening trend. So that's really, really important. Because it's a truism. It's exactly how the market works. And a trend can be nothing other than trading above resistance. So if we want to find the first hint of a changing trend or when the wind's trading direction, our windsock really is we look at a 5-minute chart, we place a buy-stop limit at a point where if it does go up, then that becomes our reality. It is increasing in price. Okay, it is moving up. All right? I'm going to write it down, Cash. Here, let me write it down because then you'll be able to see it here. I'm going to switch this screen. Okay? Here. We're going to put this in right here. This is axiom number 2. Okay? Hopefully you guys can see this. Axiom number 2. Okay? A trend is the failure of a support or resistance point. The first hint of a change in trend is to break above a 5-minute resistance point. If I did that, I would get in way before. way before the stochastics are buying above the high of the day did. So if I use that as a possible entry technique, it increased our spun up. Okay, participants failed. Okay. Now, this does not make you a day trader. You can pend this order. You can have a pending order at these prices.
I could put all these prices in the night before. I wish my Thinkorswim, I'm having trouble with the Java portion of it, but I wish it was up because I could show you how to append one of these orders. Okay? So we're going to buy intraday as support or resistance fails. All right? That's a different technique. This lowers the cost. This lowers the cost of knowing support is forming. Does everybody understand that the three different techniques we could buy a stock with? Any questions? No questions? None at all? Okay, then let's go on to this next principle. In our trading plan, we need to work on some trade identification skills. Okay? The first one we're going to do in our trading plan, we're going to have a core rule. All right? Charlie, you can't ask questions with the mic on. You fight me for the mic. I don't know if you can hear me. Charlie, can you hear me or are you hearing Charlie? Okay. Yeah, just make sure, Charlie, turn off your mic because you have to type a question. It won't, you'll compete with me and we'll hear background noise and I have my speakers on so I can't hear you. Okay. Yeah, it kind of mucks things up a little bit. Okay, a core rule is the close less than maybe $100 and a close greater than $5 and volume greater than 500,000. Okay? A personal rule, now this is really important. Personal rules. Okay, oh, I forgot to turn the phone off. No, we'll let it ring to voicemail. Sorry about that. I always forget to turn it off. Okay, on our trading plan, we're going to make a goal. This goal is going to be to make $24,000 over 6 months, or $4,000 per month, or $200 per day. Okay? Now, to accomplish that goal, we have these personal rules. Now, the first thing we're going to do on our personal rules is we're going to say we need an ATR of at least 1. Now, Brian, I'm going to quiz you just a second. Okay? Oh, please just, okay, I just typed the thing. Brian, you were asking about, you weren't sure what an ATR is. Let's see if we understood this. If you have an ATR of 1, okay, how many shares would I have to buy in theory to meet my goal in one, per day? How many shares would I have to buy? $200 shares, that's right. 200 shares. Let's say this. This means we need to trade at least 200 shares. Okay? The next thing we're going to do is we're going to make some other rules that I haven't talked about. Date must be less than 20 and range greater than 3. And I'll explain to you what those are in just a second. We're going to go in and have a little discussion here about something. We're starting to work on some trade identification things so that we can implement our triggers. All right? We understand that we need to look at 5-minute charts to help us determine and save money. To do this next little section, I want to have a paint program here to just draw something and show. Okay. Should be coming up in just a minute. Can I see this? Good. Okay, does everybody see this little paint program? Okay. Now, we're going to talk about a concept called a horizontal trading range. Is an ATR a meta-stock indicator? Yes, it is. It's an indicator in almost all software, but this indicator is very unique that I'm going to show you next. And it's very, very important in your trading plan, and it's very important in identifying some things. Okay. On a chart, we have two things. The x-axis, what does x-axis equal? Is it price or time? Kelly, I'm going to quiz you. Is the x-axis price or time? Time. All right. So we're going to say the y-axis equals price. Okay? We only have two things. An ATR always has a 1 value on that x-axis. Okay? But it can have a different value on the y-axis, right? Like an ATR of 1. Now, we are going to pick on somebody that we haven't picked on yet. Let's pick on Kerwin. Okay? Okay, Kerwin. I have an ATR of 1, and the stock has now moved $2. Is that a good time to initiate a buy sequence? Yes or no? Okay, it's moved up $2. Okay, so the y-axis is 1, but it moved up $2. No way. Yeah, no way. Okay, because this is called an overextension of price. This area is called overextension. Okay? It's overextended in price more than what it normally moves. It's a lower probability trade unless we're momentum trading. That's a different technique, but if we're momentum trading. Now I'm going to introduce you to a new unique indicator in Metastock, all right? This indicator, the first one we had was an ATR. The second indicator is called date and range. Okay, this is something that I use in my own trading a lot. Date and range. Okay? Now, this has to do with the trading range. Somebody made a trading range comment up here. I said, whoa, let's wait, because I'm going to define this slightly different. The date and range, we're going to say date equals the average number of days the instrument, or let's say stock, the stock moves between support and resistance. Range equals the average number of points the stock moves between support and resistance. Okay? Let's just read it. Okay. So, if I have a date of 4 and a range of 6, somebody articulate what that means to me. We're going to follow this through with Kerwin. Kerwin, what does that mean? We have a date of 4 and a range of 6. Not sure. Okay, let's ask Dick, what does that mean? A date of 4 and a range of 6. Yeah, what he's saying is, if I was to take this up, I'm going to bring up a chart now to help. We're going to articulate this to Kerwin because we want to make sure we don't lose anyone. I'm going to go back over here. I'm going to take this on and I'm going to turn back on my chart. And I'm going to get my pointer. Okay. Date and range is the distance between this R and S. Does everybody see this R and S? It's the average distance between the R's and S's. Okay? It's the average distance between those, between that R and that S. Okay? So the average distance between here and here. So if I take days, 1, 2, 3, 4, 5, 6, 7, 8, there's 8 days there, there's 1, 2, 3 days there. It's an average of it. It's how far it moves. It's very, very, very similar to an ATR, but it involves how far the stock moves on the y-axis and how far it moves on the x-axis between support and resistance. Okay? Okay. I'll have to, I co-developed, well, I can't say co-develop. I helped develop this thing. It's called Power Pivots. I make no money on this. This is not a sales routine. It's what I use in my own trading. It's a plug-in to Metastock. It adds R's and S's. Okay? I use it. I worked on it with a guy named Sandon Rakowski. When I was employed by Metastock at one point and left to trade my own account. Okay? And to do other ventures. But I co-developed this with him. I did some of the programming in Metastock for it. He did a lot of the programming in C. What it does, it's designed to help me find stocks, okay? And that's how we get the R's and S's on our chart, all right? So it's just an add-on that I use, okay? Now the average distance between support and resistance becomes important because it's an expression of the volatility of the stock. So in my trading plan, let's work on my trading plan now. I'm going to go back to my trading plan, okay? In my trading plan, I need the date to equal less than 20. Okay, so Kerwin, if the date is less than 20, let's see if you got this. What does the date less than 20 mean? Okay, I'll define date, and you don't have to answer until I define it on the screen. Date equals the average, it equals the average number of days between support and resistance. Okay, range equals the average points. Average number of points between support and resistance. Okay, it's very similar to if I have a date of 4, that it should go, if I have this up here at the top of my screen, what am I really trying to say? What am I trying to say with this statement? Mic off? Mike. Kelly, let's see. Kelly. Let's see. Who can hear me? I need to know. Okay. I can. Yeah. Less than 20 days. That moves. Exactly. Greater than 3. That's right. Look, if we're going to find a stock, it's got to move. In under 20 days, it better move $3. So I don't even want to look at it. I'm going to kick it to the curb because it's not worth it. So those are 2 indicators in Metastock that I designed. They're not even in power pivots. They're just something I designed for my own trading. Okay? Now, I'm going to introduce you guys to 4 core patterns. All right? These 4 core patterns, then we're going to get into some meaty good stuff. The 4 core patterns are this. 1, a bull pullback, a bear pullback, a breakdown and a breakup, a breakdown and a breakup. Okay, these are patterns we're going to do. A breakup. These are going to be 4 things that we're going to look for on a regular basis. Okay. Does that make sense to everybody? So a bull pullback will be the first thing we're going to look for, possibly. And we need to make sure, we're going to go back to this date and range and talk about overextended trading ranges and fully develop that a little bit more, but I want to get through this process of laying out a trade, a possible trade. We'll do a bull pullback. With a bull pullback, we want 3 days to 4 days down. Okay? We want 3 days to 4 days of lower lows. Okay, we want 3 days to 4 days of lower highs. Okay, we want 3 days to 4 days of lower volume. The theory is that if it stops dropping, lower volume. We want higher swing highs. Let's say higher pivot highs. Higher pivot highs. We want higher pivot lows. Higher pivot lows. We want to close greater than the open. some kind of bullish candle. Some kind of bullish candle. Maybe a Fibonacci number. Now, with all those things, if I want all those things, am I ever going to find a stock to trade? If I have to have these 1, 2, 3, let me turn back on my pointer, okay? If I have to do 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, like 17 things, am I ever going to find a stock to trade? Who thinks I'll find one stock that meets all those parameters? Can you guys hear me? All right, mic check, Kelly. I'm not getting any responses. Okay. You think it's highly unlikely that I could find one that has all of those? That's probably true. It's really true. I won't find very many of those. So what I do in my trading plan, I do this. I'm going to change the color up here. I say, you know what? These top rules have to do with how much money I have personally and how much I'm going to invest. So I'm going to say that I have to have everything in green. I hope that came up in green. Does it come through in color? Let's see. Maximize. Yeah, all this stuff in green. I have to have that stuff. But this stuff, this is called scoring a chart or ranking a chart. So everything with an asterisk is going to be ranked. So we're going to say this, asterisk. We are going to score or rank the chart using Metastock. Okay. Basically, we're going to say I have to find a stock that matches some of these parameters. Now, there's 9 parameters in there, I think. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 8. 3 days of lower lows. I usually have 9. Where did I miss? Higher pivot lows, higher pivot highs. 3 days. Oh, maybe a close. I got one. A close above the 20 MA. Okay? So, if I have all this stuff, we're going to have a rank of 9. So that'll be our rank of 9. Now, Metastock is going to let us run a scan based on that. We'll be able to run a scan and say, I must have this stuff, and then I'm going to rank the rest of them. Okay? Now, I'm going to pull in one more thing. We're going to put in some Jeff rules. Okay? Because those rules up there, hey, there's lots of different bull pullback trading systems. There's tons. You can find scans all over the internet to find them. Tons. But I'm going to teach you a new item. All right? And I'm going through this at a pretty quick pace. Sound is still on. Yeah, well, I said there's a possibility of 9. All right. I'm going to go down here to Jeff Rules. And I'm going to introduce you to a new concept. But it's the top of the hour, and I'd like to stop and if we have any questions over trade identification, triggers, or the concepts we've laid out, because I've clipped those out at a really quick rate. Okay? Any questions? You got about 4 or 5 minutes to grill me, and then I'm going to show you this other really good stuff. To currencies? I have a really good currency system. I have about 3 of them I trade. And Kelly's seen this, and I don't mind posting it or proving it to you. When it comes to my performance in the market, I'll take trades with you guys online, maybe some currency trades because it's in the evening. I showed you that a portion of a hedge fund I'm trading is up $90,000+ this month. I have a currency trading system that nets. I took 66 trades and had 6 losers. I was up 40% on the account, and I got hungry and didn't put a stop in on a Sunday night and forgot that it was Monday morning in Japan, and they took all my winnings back for the month. It was irritating. But besides that, it does not. Well, I can show you some really things that are really neat with currencies. Let's skip the currency question for just a second, because the next thing that I put in here, this rule, is really important to all types of charting. Okay? Does anybody have any questions I want to cover? David Lee, how about, nobody, just ask. You followed this through? Okay. Is there an optimum time? Okay, we're going to skip currency questions for just a second, okay? We'll skip them for just a second. We'll skip a currency question for just a second. I promise you, look down here, okay? Let me show you Cash Investor. Do you see this where it says instruments? Probably the third or fourth week, I'll deal exclusively with some different instruments to trade. Right now we're building a basic building block, okay? Let me get to that point, and specific instrument questions I will address. I promise. Don't forget. It'll be worth your time. I'll get to it. But we'll skip it down to where we got this nice big section. I'm going to bold it up. Upcoming announcement. Upcoming. Currency for the cash guy. Okay. So any other questions? None? All right. Let's go to this Jeff rule. In a bull pullback, I need resistance to be expanding on the daily chart, and support on the 5-minute chart to be compressing. Okay, this is super important. Okay, but to get into this is really important. Matter of fact, I'm gonna color code this. We're gonna put this in bold letters, and we're gonna make it in bright red here. Not that you guys care about the color at all. Okay, now let me come down here. We're gonna make a new axiom. Okay, axiom number 3. Resistance, or no, let's say momentum can be expressed as the distance between pivots. Okay. Who trades with the MACD? Who thinks they've got an awesome grasp of the MACD? Okay. Who thinks they've got it? Okay. Who has a good grasp of the MACD? Nobody? Nobody. Okay. Okay. MACD, moving average. Kelly, you think you got a good grasp for MACD? That's all right. I'm going to put some moving averages on here. Who knows what a MACD is? Does anybody know what a MACD is? Me? Moving average, convergence, divergence. Okay. The guy who developed the MACD, his name was Gerald Apple. And Gerald Apple, I thought he had a math background. One of my students corrected me. He was a psychologist. Not a psychologist, whatever, but let me show you what he was trying to do. He basically said, here's a 12 and 27 period moving average exponential. And this is going to be really important. All right? This is going to be a MACD up here. And basically what Apple said is he said that if I take the difference between two moving objects, like let's compare the slow moving average, the red one, to the blue one. The blue one's a train, and the red one is a Porsche. It's a girl in a Porsche. If the girl stomps on the gas in the Porsche and pulls away from the train, did momentum increase or decrease? Okay, so if the blue line pulls away from the red line, did the momentum increase or decrease? Or the red line pull away from the blue line? So if the train's running along Bonnie at 10 miles an hour, and the girl stomps on the gas and the Porsche takes off at 100 miles an hour, did momentum increase or decrease? It increases. So it's probably hard to follow here. The two moving averages pulled apart. They had to pull apart. Now, I want to show you an indicator. Okay, overlay without scale. Okay, I want to overlay without scale. Now, do you see my little spiky teepees here? I don't know what to call them. Let's get it spread out so you can see it a little bit better. All right. If I look at these little spiky things on the screen, like there's a little spike here, and then just after the spike, what happened to the moving averages, the MACD? Did momentum increase or decrease after each spike? Turn what? Turn on the pointer, no pointer. Oh, geez, you guys have to stop me around. Okay, on the little spikers, after this little spike, did momentum increase or decrease? It increases, and it increases after the spike. Now, let's start that again. It increases after the spike. Is this a leading indicator or a lagging indicator, the spikes? Leading, yeah. It's leading. Okay, now, let's look at something. Anybody know what the little spikes are? Okay. I'm going to pull up the chart, but anybody know what the little spikes are? I've showed some of you this. Okay. Let's look. Right here. Volume, no. Convergence, no. Watch. All right. We're going to ask Vivian. Vivian, what do you think the little spiky thing is? Come on. What do you think caused the little spike? Okay, but it's an increase in momentum. Brian, points, yeah. What caused it, though? What caused the spike? Anybody know? Look at the chart, Vivian, and look where the X and Y axis are on my blue lines. Okay, look at my blue lines. I'll put my cursor right there. That's what caused the spike. What do you think that point is? What is that point on the chart? Breaking resistance. Exactly. Does the Porsche pull away from the train if it goes above resistance? Of course. It has to. What that means is you have a long-term moving average that's your train. It's chugging along. Then you have this little short-term moving average. It's chugging along. And all of a sudden, we break resistance. What did short-term prices do when we break resistance? Every time when we break resistance, what do short-term prices do? They move away from what kind of prices? Remember, we have two types of prices, long-term and short-term. Okay, and if they increase. So what that causes the MACD to separate. So it causes them to come apart. It has to. It's an increase in momentum. Now, how does this relate to trading? Okay, I want to show you something. Now, we've got a lot of ground, and this is such a bad stock to show you this on because it involves, there's multiple types of pivots, and I'm teaching you about minor pivots right now, and what I should be, let's see if you guys grasp real quick. Now, maybe I can do it. Okay. I'll do it from the intermediate perspective, because I got to cover this anyways. All right. Do you see where this I is? That's called an intermediate pivot. You see my pointer right here? It's an intermediate pivot. And from this intermediate pivot to this major pivot, it traveled a goodly amount. But we're actually looking at this intermediate pivot. So from this intermediate one to this intermediate one, it traveled a good amount. It went from 45 to 60. But then it broke out and ran clear to 90. Was there an increase in momentum or a decrease in momentum? increase. Yeah, there was an increase in momentum. There sure was. If you look at the minor pivots, though, there was a high probability of a reversal. Okay? Because if I take the last three minor pivots, okay, which is this R to this R to this R, okay, so between those R's, there was a big decrease in momentum, wasn't there? It broke out and found sellers really fast, and that's why it got pounded and fell back. Because there was, in the short term, there was a decrease in momentum. Which brings me to a point. I got to cover this. I wasn't going to do it tonight, but because I had this stock up, I'm going to have to. In Metastock, I can take the distance between the R's and S's, which is date and range. But I can also have a date and range for the I's. Okay, here's some I's. The distance between the intermediate pivots. And then I can actually have the distance between the major pivots. Okay? So if I took the distance between these major ones, and I looked at this, I can tell you, just you have to trust me, but you can figure it out later if you want. On all optionable stocks, the average is 2.8 points over about 7 days. Okay? For minor pivots, minor. And for the intermediate ones, the I's, it's about 10 points over 27 days. And it's not quite 10. It was like 6.5 over 10 days. And for the major ones, we're looking at, it was a really silly amount. It was like 15 points over 100. It wasn't even 15 points. It was like 10 points over 106 days. I can't remember it off the top of my head. You can test this in Metastock and look at it. Which one would you rather trade? 2 points over 7 days, which is the minor pivots, 6 points over 10 days, or 27 days. Sorry, I put 10. It's actually 27. Over 27 days, or 10 points over 106 days. Which would you rather focus on? Okay. Krista, I hope I said that right. Krista, which would you rather focus on? Optional stocks that where we're looking at their minor pivots, their intermediate pivots, or their major pivots. The short-term ones. Vivian's right. I mean, 2 points over 8 days. That's what you look at. I used a method, though, that I wasn't prepared to talk to you about. When I traded this stock, I was looking at intermediate pivots. And I was looking for a longer-term play on this. And I hedged the position. This is something I'll probably hold clear to 90 on that 500 shares. Because I don't think that the New York Stock Exchange is going down too much. But I hedged it in case I was wrong. Okay, which we're going to get into in our trade management. All right? So basically, what we've stated now is that momentum, or one of our axioms is that momentum can be expressed as the distance between the last three pivots. So I'm going to bring something up. This is like where I have some notes in here. Let me close this file. I guess I'll have to do it that way. Desktop. I'm going to cut and paste some images in here. I'll go into backup. No. Master trading plan. This is just a trading plan. This is my own trading plan. This is stuff that I go through in my own. I want to come down here and look at. I don't want to go into instruments. I want to go to my notes. Those are some instruments. Hold on. You guys, I don't know if you can see what I'm clicking. You can't. Okay. I'm just going to cut and paste something in here. Just bear with me for a second. Okay, here we go. I'm going to take some pictures, and I'm going to see if this makes sense to you guys. Copy. Have this all prepared for you. Okay, we'll put down an appendix down here. Appendix A. You see this? I can't see if you're... Kelly, can you see what I'm typing now? Yeah, I guess so. Control-V. Okay, let's bring this up. Okay, Appendix A. I'm going to insert this on its own page. All right, you see this? Okay. Did you use intermediate trend up? Yeah, Vivian, I was looking for an intermediate trend expanding. Let's look at this. Okay, you see the distance between these R's, where I took this R to this R to this R? increase in momentum can be defined as the distance between pivot points. Momentum increase, that's a great pullback that you're looking at. That's almost perfect. That's why I picked it to show you. It was almost perfect. And I did trade that. Okay? That pullback says that momentum is increasing. All right? Now, if I have Pro, this is a huge reason why to have Metastock Pro. If I want to know that my daily scan, that I'm scanning every single night, if I want to know if my stock's prepared to turn in the morning, what would I want to see? I would want to see a big drop and then a less of a drop and a less of a drop. Because psychologically what happens is it drops and it's been in this nice uptrend and everybody's like, oh, it's going to go down a little farther, just a little farther, just a little teeny bit farther. And then somebody loses their nerve and they jump in and buy it. And then it breaks down just a little bit more because all of us have jumped in just a hair too early. And then it drops just a little bit more and they're like, I'm going to buy it, I'm going to buy it, I'm going to buy it. And they buy it. And what happens is it drops, buyers are coming in sooner. This is an expression of momentum. This is a better way to use than the MACD because MACDs involve time. Time is not relevant to a chart. The x-axis is the least relevant thing that we're interested in. The only reason we look at the x-axis is because we want money at a certain time. Matter of fact, the guy that developed stochastics, I talked to him once, and I asked him why the most popular settings were 14 and 5. He goes, well, I didn't pick that. That's somebody's payday. Every 14 days somebody gets paid, which is 2 weeks, or every 5 days. Has nothing to do with the chart. They're just hoping to capture some money because they're trading for a living. I'm sorry, I got to leave that phone on. I have 2 kids flying in from out of town, and if I shut it off, I apologize. Should stop here in just a second, though. I told them to pick it up quick. All right. So what we're looking for is a momentum decrease on a 5-minute chart for a pullback and a momentum increase on the daily chart. So let's go back up into our trading plan. Okay. Okay. Let's go back up here. Does everybody see that? Let's wait till it pops up. Does that make sense to everybody? No questions. How about David Lee? Was there any questions on that? Any questions? I think that's fine. Did you go over the daily to 5? More examples. All right. This is important. Okay. So what I'm going to do is I'm going to take and I'm going to pull up my stock. So I'm going to unshare the camera. I'm going to click on Metastock. I'm going to close this chart. No. Okay. I'm going to click the field glasses. I'm going to see if everybody can see this. Okay. I'll turn on the pointer. Is Metastock the only trading program I use? Of course. Of course it is. I've got a lot of development into Metastock, and I like it. I like it a lot. It's made me a lot of money. Okay, I'm going to click on a bull pullback. I'm going to click on resistance expanding. These are scans I wrote. I'm going to click Explore. I'm going to use the results from the preceding expiration. I'm going to go in, and this is one of the things I like about Metastock. I can pick my own list of stocks. Let's do a quick list. This is online. That's the Gorilla list from Gorilla.com or IBD. Or let's just go to our local data. Local data is hard drive data. Okay. And what I'm going to do, let's pick an optionable stock because I don't want to run. I can pick individual sectors if I want. I'm just going to click the optionable stocks. Geez, I wanted to highlight it and click something, but I'm just going to Control A. Okay. Let's see what finds us. Now, granted, we got to look at the overall market. Next week, we're going to work on the overall market and this thing called the position of the last 4 pivots. That's what we're going to work on. All right? this thing is going to run through and try to find us a very good scan. Okay? 2,200 stocks. Now, it's not even filtering by my core rules right now. I have this pre-filter that does my core rules. Sometimes when I trade stock lists or look at stock lists under 100 shares, I won't pre-filter them. There's no reason to. Okay, so right now it's rejecting 84%. But I'll show you, I can pre-filter them really quickly. All my core rules and personal rules are displayed in the results array. All right? Let's let this come down. While this running, any questions? How about you, Ace? Any questions? None? What kind of training? I teach a class. It's called Advanced Technical Analysis, and probably the first thing you should do is go to that class. I mean, it goes over the basic stuff that we're covering. That would be a good way to start. Kelly can set you up with that. You'd have to talk to him. Let's see. I'll send you the code. Yeah, they're going to put it on their website. Now, I got to state something. This is going to make Metastock's tech guys stress out. I wrote this code, and sometimes I can be a sloppy code writer. It makes perfect sense to me, and I know the quirky ins and outs of it. I would give it to you, but it's not Metastock product. Okay? They won't be able to short you. Can you hold for just a second? You guys, hold on. Hold on 1 second. Okay, anyways, go ahead. Real sorry here, back from working late. That's all right, we'll win. So I'll send you this code that I'm using. I think Kelly's recording this. Are you recording it, Kelly? Okay. So, Will, you'll be able to watch this at a later point. Hammer, I don't like that. Momentum definitely increased. We had a pullback. We have an inverted hammer. What did the market do today? The market dropped today? No, it was flat. That's not a good thing. That thing jumped and got clobbered. So I'm not too fond of this one. Let's see what else we've got. All right. Lost the sound. I didn't sort my core personal rules. If I go like this, watch. Maybe I want to get this list down more. Do you see where it says pre-filter? Okay, let's wait till this pops up. I'm going to hit Explore. I'm going to use the results from the preceding expiration. I had 85. I had 85 stocks without core rules and personal rules. Now I only have that many that I can trade. Those are the only ones that met it. There was Cree. Now I can tell you I like Cree already because I know Cree's in the semiconductor sector. The semiconductor sector has been beat to a pulp. And I didn't look at it today. Is that AKAM? Oh, yeah, that thing gave me a little bit of money just yesterday. Let's look at that again. That came up on my scan, and I actually liked that one the other day. Did pretty well on it. If I go back here, I'm going to right click, I'm going to go flip. Okay, support at increasing momentum, and it scored a 4 on my Infuego meter. That just means that I had 4 good things going for me. My wife's from Peru, so I was kind of being a smart aleck when I did that. Anyways, this thing's down towards support, and this commentary will tell you that that's a good one. This may be one we want to buy. Maybe. So Metastock goes through, and you can scan for all those rules that pivots are lined up in a downtrend. Pivot A is less than pivot B, pivot C is less than pivot D. It's in a downtrend, but we want to look at the overall trend and see what it looks like, okay? Oh, look, yeah, that's a nice compression of support. There was a huge drop, and then we found a big support level down here, all right? That's a big support level, but we can't buy it until the pivots line up right. I don't care if it, see the distance between there, see this I to this M? It decreased. It dropped less. So it's showing here. I'll even show you using the intermediate pivots. I'm going to go in and I'm going to turn off all these little minor pivots. Minor pivot. Okay. And if we look at the distance between these, okay, well, we just want the last three. So let's go to the last three. We don't care about any but the last three. Doesn't that look like it decreased in momentum? Vivian, did that decrease in momentum? The distance between pivot A minus pivot B to pivot C, did it decrease? Yeah, it did. So Pre's a good one, but this is all screwed up. You see this? It dropped off at the end of the day. So let's pick on Bonnie. Where would we buy this? Here, let me give you some extra help. Expert properties before you answer. Oops, I didn't want that. I want this. Oh, I guess I don't need to serenade you by whistling. Okay, where would you buy it as a guess? Or Brian D., you can answer this too. Where would you buy it? No comment? All right, I'll pick on somebody else. How about Kerwin? Where would you buy it? Did I lose everybody? Okay, Vivian, what's you? You wouldn't. When support, Vivian's got one. Let's see what Vivian says. Why would you buy it, Kerwin? When support increases or support? No, not quite. You would buy it. You have two opportunities to buy it. Here, when resistance fails, because it fits one of our axioms. If I buy it above that little R up here, what that tells me is the pivots have changed and they're lining up right. We crossed above one resistance point, three moving averages, another resistance point. Well, how many things do you need to tell you it's going up? If I buy above that second blue line, it went above 3 MAs, a resistance point, a second resistance point, it's moving up. It's moving up. I could even buy it at the first resistance point. There's another MA up there that's kind of slugged into. Oh, you didn't like the whole chart because it was down below there? Well, it was the first example I found. It wasn't perfect. Here's what he's saying. He doesn't like this chart like this. He doesn't like it. So it ranked only a 6. I mean, we could look for a higher rank. Since Kerwin didn't like this, we're going to go into resistance expanding. We'll find one that he likes. Okay, here's one that rank. Let's look at this is a semiconductor. We'll pull it up and look at it. Okay, Kerwin, do you like this one? Oh, 20, 50, and 200. Okay, Kerwin, we got to ask Kerwin. Not so much? Jeez, that one looks pretty. Can we just have different taste? Because better, though. 20, 50, 200. Oh, I think that this looks nice. It's got a hammer. It closed near the high. It's got resistance expanding. I'm hurt, Kerwin. I'm really hurt. I can feel the pain now because I think this is a beautiful chart. Okay, now with this, one of the guys, and I don't mean to be crass, but one of the guys who taught me how to trade, his name's Andy Bouchak. And Bouchak used to say something to me. He'd say, he's a pro football player, he blew his knee out and then went to trading stocks. He said, Jeff, just because you see a pretty girl in the club doesn't mean you're going to go ask her to dance. You have to wait until she winks at you. Well, to me, this is a pretty girl. It's a pretty one, but we have to decide what to do. Well, I'm going to pull up on this symbol. Let's look at the intraday one. INVX. Okay. I haven't checked earnings. I haven't checked the overall markets. Don't run out and buy this on Monday. I mean, we got to do some more research. I got to see when earnings are coming out, what the overall market's doing. It ranks 7 out of 9 things. Okay, we're going to check a couple more things. Okay. That's seriously what Andy used to tell me, and he'd say, I'm going to show you, this is kind of how he expressed it. I'm waiting for this thing to pop up for a second. While it's coming up, this is a feature in Metastock. If you right-click, you go to Research, Analysis, and Risk Alerts. I like this screen. I'm going to try to close some of these charts here just a second. Okay, there's the daily one. Let's minimize that. The 5-minute one's still coming up. I don't know what. I've got mine set to load like 30,000 bars, and so it takes it a long time to load the stock. Plus, you guys are all connected. The screen should have refreshed. Okay. So Kerwin ended up being right. I have to bite my tongue. Gosh dang it. All right, let's see if we can find another one in that list real fast. Okay. What I wanted to finish tonight is trade identification. So if any of you have questions on trade identification, just tell me. Okay. Let's look at this. Oh, I did have my risk. I did have my pre-filter on. I'll have to go back and check the volume settings. There's a quirky thing right there. This is where, remember I told you I made those indicators? I probably lowered the volume on a scan for some reason, and so I got one that came up with very low volume. This is where I changed a lot of stuff, and I'll try to set it to a pretty standard setting for everybody. I'm looking for a possible pre... Oh, no, I didn't. Let me take that back. I'm looking at this. See, the ATR is too low. My core rules say I need an ATR of 1. And I need the distance between support and resistance to be 3. There's only one in there with 3, and that's pre. The next one is this DSP. So I did, because I scanned just the semiconductors, so I didn't use my core rules or personal rules. So that's why I had one with light volume. Okay, let's pop this up. See if we found one. I'm not fond of that one at all. Okay. AMT just means it's just indicators that I placed in that I did my own development on. You'll be able to download what we've talked about and read it later. I just saw that. Okay, so what we were looking for, let's recap. I'll just go through because there was 2 late guys, and it's a good time to summarize. I want to bring up our trading plan and summarize what we've talked about a little bit. Okay, I'm going to go out of Metastock. I didn't find anything too exciting. Okay, we've covered a lot of ground. Okay, first off, we laid out a trading plan. We said we wanted to make 24,000 over 6 months, 4,000 per month, 200 per day. So we laid out one strategy to trade ID. We need some core rules, a close greater than 100, close greater than 5. We have a trading range that we need of at least 200 shares over 3 days, which brings me to something that I didn't finish developing, and I wanted to finish bringing this up to talk to you guys about. Does everybody understand that the relationship of an ATR and Dayton range are very, very similar? Are there any questions about that? Okay, so an ATR has a horizontal or y-axis of 1, and maybe if this had an ATR, let's change this, maybe it had an ATR of 3, it moves $3 every day, If it had moved $6, it's overextended by $3. Does that make sense? Okay. So does everybody clear on what an ATR overextension is? Are you okay with that, Kerwin? Does that make sense? Okay. So let's talk about a date and range overextension. What would be a date overextension, Dick? No. Okay, this one, let's draw a little line here. Well, yeah, essentially what Dick said was correct. This is an ATR from this side of the chart. This is my date and range. So to be in my example, it would be an overextension of 4. It would have moved more than 4 days and not changed direction. So if the stock went up 5 days and normally it only goes up 4, at day 6, is there a high probability of a reversal? Yeah, here, let's pull up a chart and look at. Let's talk about this a lot. Okay? This is important. Let's switch charts, though. I didn't like this chart. It was ugly. Switch that chart. This is the one I liked, but it didn't have any volume. It was a speak. Oh, it's a $5 stock. Ah! Jeez. See, I'm so used to running my core rules and personal rules, I would have never got a $5 stock in there. So, I had to eat crow on that one, too. Okay. This one, just for an example, I'm going to give you this. We're just going to bring up an expert in commentary. Over here, under the commentary section, the average number of days between support and resistance is 7.4. The last one occurred 6 days ago. Well, that means we're starting to move away from that price. The average price between pivots is 60. We've currently moved up 36. So we've got a little bit more move that we could go up on it. What this does is just tell you whether you have overextended date and range. Okay? That's what this section's telling you. Can you see that? Is anybody seeing the chart on my screen? Yeah, okay. So that's an example. I would never trade a stock that cheap. I used to trade them that cheap, but I wouldn't now. Okay, let's go back here. Okay, so back to our example. Are you guys seeing the maximize this? Okay, back to the example here. Oh, you're seeing my second screen. On this example, we would say if the date went too far one way or the range went too far one way, it's identical to what you read. If you ever pick up a book and read about ATR, you can have an ATR of a trading range, and that's what we're discussing, overstretched price and time. Okay, let's go back to our trading plan. Okay, second, switch this. Okay, can you guys see the trading plan now? Okay, so we have a bull pullback, we rank some things, and then we look for resistance to be expanding and support compressing. Any questions on that? No questions on that? Okay, I'm going to scroll down a little bit. We talked about 3 different triggering methods. The last method saved us money. And plus it got us in as the trend developed more. As we scrolled down, we had a section about some notes. In our notes, we laid out 4 axioms that we felt like that the market behaved that are irrelevant to whether you're trading currency, stocks, or anything like that. Now, these axioms are going to be the building blocks for the rest of the class. So any questions on these, cover them right now. We had our order types that we talked about, buy stops versus buy limits. We talked about an ATR, our trading range, and cost of trading stocks using different techniques to buy it. No questions? Back to the chart, day chart. At this moment, we don't have a compression of support. We had two of them saying it was done going down back here. Now, let's show you something, and this is for Kerwin to look at. Right when this indicator occurred, there's a high probability of a reversal. And look what happens for a little bit, at least after it. The higher the indicator is, it goes as high as 6, the higher the probability is of a reversal. Okay? So all that's doing is it's measuring 3 pivots. Let me show you what it's doing. This is an indicator. This is a non-published indicator. I maybe have 5 or 6 people that I've given it to. Okay? And basically it works like this. We're going to start on the support right here. Okay? Hopefully you guys, can anybody see the whiteboard? Okay? I'll give you the indicator, Dick. I'll give it to you. Okay? Look, one thing about me, I don't hoard development. I'm very open with what I'm doing. A little too open sometimes, but okay, can everybody see the whiteboard? Okay. Let's say that this is a minor pivot, minor pivot, minor pivot, minor pivot. This is an intermediate one, intermediate one, intermediate one, intermediate one, a major, a major, a major, a major, because there's different pivot types. And if I took the distance between here and here and here, I should have drawn an up one. This also has some basic Elliott wave in it, this indicator. I don't know if you guys are into Elliott waves. But, okay. I'm just drawing the distances between these down moves, all right? There's a down move, down move, down move. Now, we're just going to do some math. We're just going to say the first down move is A minus B needs to be less than B minus C. Or, it needs to be greater than B minus C. Sorry. Okay. That looks a little confusing on the chart. The whiteboard is on. Yeah, I want the whiteboard on. Okay, I want the whiteboard on. With that whiteboard on, we're looking at the distance between those pivots. And what I do is I say in my indicator, this is a proprietary indicator, I say I give it a score of 1 if that event occurs on the first one. I give it a score of 2 if that event occurs. I give it a score of 3 if that event occurs. So if the distances between those pivots is shrinking, like let's just take this, between here and here, if the distance between the M is $5 and the distance down here between the M is $1, well then momentum decreased. It dropped $5, there was a buyer there. If that happens, I score the indicator at 3. So 1 plus 2 plus 3 gives me a total indicator value of 6. And so if this is I use this in my own trading. If that indicator says that there's a 6, there's a high probability of a reversal. That does not mean to buy it right at that moment. Our first axiom is that support is an upward movement in price, that we need to use a buy stop. Our second axiom is a trend that develops as resistance fails. You buy about 5-minute resistance, it's the best you can get. You found all the rankings and stuff, it's the best you could get. Okay? That's an indicator I have on there. I'll place it up with Kelly. Kelly will hound me because you'll hound him, or some of you will hound me, and I'll get it to him. In an indicator pack. I just pull that on, and it just tells me if it's decreasing on the last 3. It's not 100% perfect, but it just gives me an idea that the distance between these 3 different pivots is slowing down. It's slowing down. Momentum is occurring. It should be going up. Okay. Any questions on that? Let's fire up questions because I don't want to introduce a new concept tonight because there's not enough time. So fire off any questions you have. Just the one that I use, Cash Investor. I think one of the guys who taught me how to trade was Tom Joseph. Okay. Oh yeah, I better say something. I need to clarify this. I think I hinted to this at the very first. This indicator pack uses power pivots. It's things I designed. If I give you the indicators and you don't own power pivots, they'll give you a 30-day trial on it for like, I don't know, Kelly, I'll tell you how much. Money back guarantee, but I use that in my scans. No power pivots, no scans. I don't make any money on that, okay? I'm not pushing you to buy anything. I just want you to be able to trade successfully and show you some of these tools. Okay? All right. Dick, what is the relationship of 5 minutes today? Dick, you've been asking that several times. I don't understand your point, and I know you are so methodical, it's not even funny. And I cannot understand the question of what you're asking. I think what you're saying is, if the day chart is expanding and the 5 minute is compressing, that's why I use the 5 minute. It gives me a hint on that. Well, let me say this. Okay, here's why I use the most of what you're showing us is the 5 minute one. Let me tell you why I use the 5 minute. If I go 4 days down as a standard pullback, like 3 or 4 days down, and every day there's 78 5 minute periods. If I need a major pivot, which requires multiple 5 minute periods to create, then it gives me enough data to make an assessment of the movement. Anything much higher does not give me enough data sampling. For example, 3 days down at 6.5 bars, because that would be an hour, there'd be 6.5 hours in a trading day, would only give you a data sample of 6.5 times 3, or maybe 36 bars, but every day I can get 78 on the 5 minute. I hope that answers your question. Okay, does that make sense? Did I answer your question, Dick? I hope I don't embarrass Dick. I know Dick, and he was a NASA engineer, and he will ponder this to no end, and he will come back to me with such a methodical question. I really like Dick, and he's just going to be really tricky in what he comes up with. But the reason we use a 5 minute one is because I have more data to sample. It gives me a larger data sample to be able to develop that things. Once we find this pattern, we have to buy it as it goes higher. The higher that indicator scores, the higher the probability of a reversal. Okay, any questions? Oh, okay. Yeah, this is, we'll just pick it up next week if you don't have any. Do you use some volume? Yes, we'll talk about volume. We'll get on that. Because one of the things in our trading thing was that volume had to be going a certain amount. Okay, those of you who don't know me, there's a few people who know me in here. Did this make some sense to you? God, this weird thing happens, Kelly. You're going to have to explain this to me. When people start writing, it writes halfway up the page, and I miss it sometimes. Okay, I'm going to put you guys on hold while you type in a question real quick. I got to see if that's the people I need to pick up. Okay, so you make a trade based on the 5 minute chart. Yeah, you start to look for hints of changes in trend based on a 5 minute chart. And I look for a slowdown in momentum before I make that trade, and I also look at the position of the last 4 pivots. And then I start to tear into the trade. That's correct. Hey, Kerwin, did you have any questions after you deeply hurt my feelings on my beautiful chart?